Hello, I'm Jared Nelson, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. The listing of Coinbase in April was the coming-of-age moment for the crypto sector. At its peak price, Coinbase had a market capitalization larger than ICE, the parent company of the New York Stock Exchange. The direct listing was certainly a milestone for the crypto market. The customary listing pop had set investor pulses racing as they imagined a 12-digit valuation for Coinbase. Alas, that was not to be. Instead of soaring to a $100 billion valuation, as many had hoped, Coinbase peaked in its listing day, and prices have struggled to surpass that high ever since. Prices touched $250 just recently, marking a decline of more than 40% from its peak price of $428. Other smaller crypto stocks are down on a bigger margin. Riot Blockchain and Mara's share price have slumped by 59% and 45% respectively from their recent highs. Looking back, it appears that Coinbase's IPO marked a peak in crypto-related equities. But if we examine the underlying crypto market, it is still booming. No doubt these virtual coins are the investment asset of the year, especially altcoins. Have you seen Dogecoins recently? Its year-to-date return is an incredible 13,000%. Many coin investors captured that proverbial and elusive 100-bagger. So powerful is its rally that Dogecoin is now the fourth most valuable coin in the entire crypto market, worth a staggering $82 billion. Not too bad for a doggy coin that started out as a joke. A host of other small coins also soared in value in recent days, like Ethereum Classic, which started the year at $5 and rallied to $175 last week. Momentum is certainly very strong in the market. This brings us to one point. Investors are probably flocking into crypto coins now instead of buying crypto equities. This is understandable. Who wants to hold Coinbase, which is sliding every week, when they could obtain 500% returns in altcoins? The difference is just too huge to ignore. But the hyper-performances of these altcoins will not last. Traders will need to book profits at some point. This factor alone will cause prices to regress, gently at first, before the fall steepens as weaker prices trigger more sell orders, a kind of cascade effect. And beware of the Elon factor. Dogecoin slumped by more than 20% during Saturday Night Live as he chatted about the coin. Undoubtedly, a big party is taking place in the altcoin crypto sector, and investors are dumping crypto stocks. This makes us wonder if there is a buy opportunity in the crypto equity sector. As Warren Buffett had always stressed, the secret to making a fortune is to be greedy when others are fearful. Fear is certainly present among crypto miners. Many had deserted stocks for altcoins. And those shareholders who stayed as long-term investors are becoming impatient as they look enviously at DOGE's performance. But as long as the granddaddy of crypto coin, Bitcoin, is steady, many of these miners are raking in profits day after day. Mining never stops. In some ways, the fundamentals of these miners are improving because profitability is increasing. They are sourcing more machines to mine the appreciating Bitcoins. Did you know that even miners are hodling Bitcoins? That is, they mine and hold Bitcoins in their accounts and issue shares to fund their general expenses. This way, they will not need to sell their Bitcoin inventory. Can you imagine a world where gold or silver miners all mine to hold? This will, sooner or later, cause a supply squeeze because investors can't get hold of the asset. That's why a $100,000 Bitcoin from the current $60,000 is a possibility. Based on this reasoning, we think the recent massive correction in crypto miners' share prices could be a good opportunity to buy, in preparation for a rebound sometime in the second half of 2021. A year ago, when Riot Blockchain was trading below $2, few thought it was a good idea to buy the stock. It was the wrong sentiment. 3 months ago, when Riot was trading above $75, few thought it was a good idea to sell. Traders were betting prices would go to the moon. Wrong again. Now that the stock has been cut down by half, many are wary of buying the stock. Could this be the wrong sentiment? With the underlying crypto market still rising, there is a possibility of a rebound in these crypto stocks later this year. The time to buy is when they're beaten down. Of course, we will not know which miner will outperform. A portfolio approach is needed. Some U.S. candidates include Riot, Mara, Bitfarm, MicroStrategy, with Coinbase as an additional attachment. We would scale in buy orders because we're not sure if a price bottom has been reached. Start small and see. At this point in the crypto bull cycle, we're already halfway there. You cannot expect Riot to repeat its 7,000% rally again. Expectations have to be tempered. And be prepared to sell when Bitcoin starts to move parabolically upwards. That's all we have time for this week. Make sure you do your own due diligence before making any investment decisions.